Welcome to Markets Now. I'm Michelle Rook with DuWayne Bosse with Bolt Marketing, and we are seeing mostly lower prices, DuWayne, except for a few of the wheat contracts. And corn and soybeans actually started off a little bit higher this morning, kind of some report push from yesterday, I think, or some follow-through buying as a result of that. But what, we ran into some chart resistance or what? Because we're trading lower now?
A little bit of chart resistance and a little bit of farmer selling. We got to remember harvest is still going on, right? Yeah. And you always get hedge pressure on Fridays and Mondays, it seems like. And we bounced off of some lows we've been holding for a while. So farmers probably should reward the market a little bit. Nice surprise yesterday in the USDA reports. I got to be honest with you, Michelle, that I thought yields were going to increase. I've been hearing good yields, but I guess when I really think about it nationwide, there is a lot of better than expected, but still very close to last year, like for corn. And that puts USDA correct then.
Okay, so with all of that in mind, small crops usually get smaller though. So right. Are you expecting, further yield cuts down the road?
Yeah, very possible. So, sometimes trading, when you first step is admitting you're wrong, I thought the yields were going to go higher. So I was heavily hedged, 100% hedged on everything yesterday. And seeing those yields come in lower, you're right. USDA usually just keeps trimming them lower. Now you got some exceptional years in there too, right? But I don't expect the yield to be slamming higher in November or December. So I exited hedges yesterday. Now, Michelle, I don't think that means I'm a crazy bull in the corn or soybean market right now, but I just feel like for corn, for example, it just kind of refuses to go down and make new lows. And we've got some nice positions on with some good profits and hedges, and it just felt like just go ahead and take them off. So I guess I'm thinking the harvest lows are in.
And while there's some that would agree with you on that the harvest lows are in, especially with the chart action yesterday, how much farther can we push here though? And what's it going to take to close above 13 on beans and $5 on front month corn here?
I think you're right. I think let's start with the beans, because I think they're going to have to be the leader. They're the one with the tight ending stock, 220 million bushels, right? And people are even questioning how USDA came up with that number. They had to do some tweaking to keep it above 220. I think the key there is South America weather moving forward and U.S. demand, obviously, which we had good exports this morning, some flash sales. But Argentina's still dry. In El Nino, they shouldn't be dry. We keep waiting for the rain patterns to come in. They haven't yet. If we come back to these markets next week and it's still hot and dry for Argentina, you might get soybeans to go up above that 13, and that might drag corn up with it.
Yeah, and we were pretty oversold, really. We had sold off a lot in beans going into the report and in the meal market. And boy, meal was a big leader yesterday. And obviously with the meal sale that we saw this morning, that might have been part of it, right?
Yeah, I think that was big USDA sales flash this morning for some soybean meal. And you're right, we got to remember funds got out of all their long positions for soybeans. They probably even went short the market a little bit, and they're rarely short the soybean market. So then when USDA prints a 220 ending stock, when everyone thought it was going to go higher, I think the whole get me out quickly happened yesterday. We probably didn't have to go up that sharply that quickly, hence the down 9 or 10 cents today.
Yeah. And like we said, corn not able to take out the $5 mark. Certainly South American weather problems would help there. But I got to ask, you're a farmer. A lot of farmers are storing corn right now. What's it going to take to pry that corn back out of your bin after you get those bin doors shut?
For me, not much, because like I said, I'm not that bullish the corn market. You get a pop to that 525, 535 area for sure. And I'm letting a lot of it go quickly, Michelle. The reason being is I still think export demand has to decrease. China's bought a lot of corn from Ukraine, at least that's a trade talk. And Brazil is actually cheaper than we are throughout the end of the year. So how do we expect to really move a lot of this corn? Talking to our local merchants around here, I said the PNW is basically no bid for corn or beans, which is funny because we had great exports here recently. But moving forward, it doesn't look like China's desperate. Now, maybe yesterday's report changed, but I think you get to 520. I'm going to sell that corn quickly. Interest cost, depreciation, everything going on now. And forget about $6 corn, Michelle.
Okay. What about this wheat market? Certainly we're off of contract lows, but not far from it. We did score a bit of a reversal yesterday, though, from a technical standpoint, especially in light of what was kind of bearish news in the report.
It really was. It wasn't a good report for wheat. Big bump up in yield again, which is partly due to that big spring wheat crop. So yeah, ending stocks went up more than the trade anticipated. It's still a fairly tight supply compared to what we've had. But I really like the trade reaction from wheat here. You get a bearish report and almost a bullish reaction. Now today, we're cooling off a little bit after we started higher. But if you're bullish corn and soybeans, you need wheat to bottom probably first and start to find their seasonal lows, which I think we have now, and move higher. China in buying more wheat from us today. That's, that was rumored basically all week. So it's nice getting that confirmation. Hopefully we see more of that moving forward, because right now USDA has exports as low as 700 for wheat. And boy, that's a low number. Hopefully China can really step in and buy some more wheat from us.
Yeah, I was like you, though, that had been rumored all week. So I thought maybe we'd do a buy the rumor, sell the fact here, but we'll take that business if we get it. As far as the wheat market moving forward, how concerned is the market going to be about what's going on with the Middle East conflict, or does it not matter?
I know it should matter, that along with Australia being very dry, Argentina being very dry, I think the fundamentals look a little bit better at this price. What's nice about the wheat market, which I don't like about corn, is that wheat went down to find the export demand. We went low enough, we found it. Now China's been buying. The problem is maybe the US dollar up a little bit makes it, we have to be that much cheaper to keep moving it. But no, I think the trade should be somewhat, well, not excited isn't the proper word, but friendly, the wheat market at this point, from these prices anyway.
Yeah. And I guess I asked that because it seems like we have gone numb on Black Sea war news. And so I didn't know if a new war, if we were already numb to it. So
I think we're already numb to it.
Okay. To your point. Okay. The cattle market, we did have some higher cash trade yesterday, which certainly helped push the market, but can we continue to build on that? Today it's Friday. We're seeing a little profit taking, you think?
Yeah, I think so. The fundamentals are strong. Like you said, higher cash cattle this week. That was good. That really saved the market from kind of a sell-off we've been having from the funds getting out of long positions. But I still think, sadly, we've seen the highs for the rest of this year. We can maybe go test them again in 2024, but there's a whole lot of questions before I get that far out. Fundamentals are good, like I said, but my problem is I don't think the funds want to be long that market, at least not to the extent they have been before. And the longer this market doesn't make new highs, the more of the funds that are still long will just want to get out of it. So I'm a little nervous that market. I kind of like guys maybe doing some hedging here, some LRP insurance, something to protect, go out as far as you can, protect next year's calves maybe. This year's calves, I think we're going to be around 250 for the index no matter what. But next year, there's just so much time there. I do like some hedging there.
I do like the fact that it seems like the cattle market has been able to kind of shake off some of this outside noise, at least, or we haven't imploded as a result of it. But let's talk about the outside market noise, and what it's doing to the dollar, what it's doing to crude oil and those sorts of things, and how that money flow will impact the ag commodities sector.
Yeah, it's funny. It seems like a week ago, but it was, I think, just yesterday we had the CPI number out, or Wednesday morning. I can't remember. The harvest there all days kind of clashed together for me. I apologize. But that CPI number came in a little bit lower than anticipated. So that means that reading is indicating that inflation is actually easing a little bit. It's not bad. Well, it's doing that while we're at high interest rates. That's going to get the Fed to think, well, these high interest rates can stay longer or maybe even go higher than we thought. And that's not good for everyone spending money, basically. And also that really turned the US dollar, which was starting to trend a little bit lower, shot it right back up. This 106 level is not good for exports. And let me go back to that corn market. I said the harvest lows are probably in. That doesn't mean that corn can't go make a new low this winter because demand stinks and South America has a good crop coming. So we got to really watch that weather.
Yeah, definitely. Thanks for joining us, DuWayne Bosse with Bolt Marketing. That is Markets Now.